Good morning. So big news. You got a credit card. You're buying a bank. You'll be able to take deposits, make loans based on those if that charter goes through. This seems like part of this kind of new challenger bank, neobank movement. A lot of focus on Chime out there. What unique mechanics is SoFi going to be able to offer here?
Hey everyone, Coach Investor back with another video for you today. So in today's video, we're going to talk about SoFi. Most of you know I sold my shares of SoFi to buy shares of Roku. That does not mean I'm bearish on SoFi. I'm actually very, very bullish on it. Yes, I know some of you were surprised. How come I sell shares when I'm not bearish? Well, sometimes you have to balance your portfolio. Just so you know, I manage a couple of other portfolios and SoFi or IPOE is the #1 stock in that portfolio. So please don't dislike this video. Thank you. But in this video, we're going to discuss their new acquisition. As most of you know, they are acquiring a bank. They're going the same way as Square and many others. By acquiring a bank, they can be way more flexible with the interest rate that they can offer, with the payments, with everything that's been done in-house, way better than going with a third party. But before I do so, I just want to thank everyone that has been subscribing lately. We finally reached 14,000 subscribers. Let's try and reach the next milestone. And if you haven't subscribed yet, hit that subscribe button, and if you like these videos, leave it an early thumbs up as it really helps me out grow the channel and get my videos out there. So without further ado, let's dive into this. Right, so SoFi recently announced that they are going to acquire a bank called Golden Pacific Bancorp, a Sacramento bank with 3 branches, just 3 branches, for $22 million. This may sound like a tiny acquisition for SoFi, and it actually is, but it's way more significant than what you think. So back in 2020, SoFi actually filed paperwork for a banking charter. It was granted a conditional approval, but right now they think that going this way by acquiring a small bank is a better way. That's how Golden Pacific comes in. So Golden Pacific doesn't really fit SoFi's profile, let's say. It's pretty small. I think it has $150 million in assets, but that's not it. SoFi will actually pump $750 million of their own money into that bank to accelerate rapid expansion across all states. Some of you know SoFi is going to the market via a SPAC, but that merger is not yet finalized. But if you have looked at their investor presentation and the financials, you'll know that they're getting $2.4 billion for that merger, so they've got plenty of cash on hand. Right now, pro forma, the market cap is at around $14 billion. I think the deal was announced back when it was at 8 billion, so it has risen a bit. Overall, if you compare that to the likes of Square or something like that, or PayPal, which are worth hundreds of billions of dollars, SoFi is still a small player. Now let's go and see what the CEO had to say.
Well, thank you for having me, John. The national bank charter is an important element to allow us to really differentiate SoFi Money, but also to lower our cost of loans, which will allow us to make more loans to more people at lower interest rates. In addition to that, we will be able to offer an interest rate on SoFi Money that's incredibly competitive. We want to offer one of the highest interest rates in the marketplace and be able to do that across any type of account that you have your money in with no restrictions. As long as you do direct deposit with us, you'll get a high interest rate, no restrictions on the use of your money, whether you want to pay by your phone, pay with a debit card, or do electronic bill pay, in addition to being able to deposit cash. So our goal is to give you the best of checking and savings in one account like SoFi Money, and getting a national bank charter will allow us to do that by lowering our cost of loans and using that excess cost to increase the amount of interest we can provide on deposits. We think we can provide a very differentiated product and service, not to mention service more people more broadly, grow the company faster, and allow it to be more profitable.
One of the big reasons I'm still a big fan of SoFi is because of the CEO, Anthony Noto. I think his vision is pretty clear. He knows exactly where he wants this company to go. Now they're going to talk a bit about the interest rates and people that are going right now into putting their money into Bitcoin, stocks, etc. Have a listen.
A lot of fintech players are turning to Bitcoin or turning to stock trading as a way to attract the consumer audience. Is that an important component of this? Are high interest rates on savings accounts enough?
I think there's a couple of different ways to serve our members well. When we first launched SoFi Money, we were able to launch with a high interest rate. We had a partnership that allowed us to offer 2.25% interest. But because we're not a bank, we have to rely on someone else to provide us a partnership that sets that interest rate for us. And so now our interest rate is very low because the federal funds rate has dropped to essentially zero. When we have a bank charter, we'll be able to determine what interest rate that we want to provide and not be dependent on anyone else. We have the capital and the financial model, because we're a digital company, to provide a much more attractive interest rate on SoFi Money than we're providing today. So getting the national bank charter will make SoFi Money a lot more appealing. It'll have a high interest rate. It'll have early availability of your paycheck. It'll have overdraft protection, in addition to doing everything you want to do on your phone: pay a friend, pay a bill, pay at retail, or pay with a debit card.
So as you can see, just like Square became a bank, because they want to do everything in-house, it's way easier to do everything in-house than to rely on a third party. For SoFi, that's the SuperApp, getting loans, higher interest rates, getting them to get their money right, helping them with their investments, etc. Doing everything in-house, doing everything with one app in your pocket is the ultimate goal. SoFi's compound annual growth rate for the next 5 years is supposed to be 43%. That's what they want. And I believe this is one great step in the right direction. As you know, apps like SoFi, Cash App, PayPal probably as well, Venmo, have a way lower cost of acquisition than traditional banks. For Square, that's even less than $5. Traditional banks, that's over $200 on average. So again, great move by SoFi. Big fan of the CEO, big fan of the company. I don't have to own every company I love. Otherwise, I would have 100 stocks in my portfolio, if not more. That will be it for this video. Let me know down in the comments below what your thoughts are on this move. I know a lot of you love SoFi. I hope this clears my view on SoFi, or maybe your view on my view on SoFi. So let me know down in the comments below what you think of it. And if you like these videos, leave it a thumbs up. If you haven't subscribed to this channel, hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye-bye.